This is my brother Favor, and he is a beginner Forex trader who wants to get started into Forex trading. Now, he knows absolutely nothing. Yes, there were times where I taught him a couple of times, but it has been a while. So in this video, I'm going to teach him how to trade Forex from scratch. And yeah, so Favor, what do you think Forex trading is, bro?
Like, I don't have any idea. I just think like just press buy or sell whenever you feel like and make some money, you know.
That's basically the base model of what Forex is. But in this video, I'm gonna take you from being an absolute beginner to becoming a professional. Are you ready?
Yeah.
Let's get it. Alright, Favor, before you talk about any profit or even think of touching the Forex chart on your phone, you have to understand the basic, fundamental thing of what Forex trading is. So basically, I want you to think of trading like a scale, okay? Do you know what is a scale?
Yes.
A scale is basically that thing you go on top and then you scale your weight to see how many kg you weigh. So let's say, for instance, you could weigh 50 kg, 60 kg. It doesn't really matter. I want you to think of it like that, okay?
Okay.
So in the morning, you may weigh about 50 kg when you wake up, right? Let's say you go on the scale, you weigh yourself and you weigh 50 kg. And then throughout the day, let's say, for example, you go to school, you eat your breakfast, right? Like you ate a lot of things there, you ate, and after eating breakfast, you also play ball, and then you do so many activities throughout the day. But let's say you ate a lot of food that day because maybe your friend at school or your peers bought for you cake, you ate pizza and different types of things. Now, during those activities throughout the day, your weight will be fluctuating. So sometimes you may weigh, maybe you ate a huge amount of like pizza, and then after that you went to play football, your weight will go down, you understand? So it went up, it went down, and then, but overall, you ate more things than you're actually supposed to eat, so you gained weight, right? So let's say later on in the evening, you go back to check your weight, and you found out that in the morning you're weighing 50 kg, but right now you are now weighing 51 kg after all the food and activities you have done throughout the day. Doesn't make sense. Now, I want you to think of Forex trading as the same thing. Price movement fluctuate the same way we and our bodies fluctuate when we eat, when we do different types of activities. That's the same way currency pairs or Forex trading market fluctuate, right? So let's say, for example, the economy of United States might be doing well. That will make the price will fluctuate and make the dollar stronger, right? Because the country is doing well, more money is entering. The same way more food is entering your body, the same way they gain strength. Now, they are what we call currency pairs. Now, we have 28 currency pairs. Say 28 currency pairs.
28 currency pairs.
So, these currency pairs are mostly written in three letters. Like, for example, USD versus JPY, right? So, it would be USD/JPY, and then there could be USD ZAR. That is USD/ZAR. That is South African Rand, right? So, all of them have a slash in the middle to show the strength against each other, right? So it could be USD versus the JPY, which is the Japanese yen, right? So we have what we call a base and we have what we call a quote. A base, as it stands, base, it's basically the base fundamental of the currency pair. So the base is the first one that starts. So in JBP USD, what is the base? JBP, because it's the one that is starting. What is the quote? USD, because it's the second one. So let's say, for example, Euro USD. What is the base? Euro. Because why? It is starting. And then the quote USD, because why? It is the second one. So whenever we say Euro USD is strong, we're basically saying that the base is strong. So when the base is strong, what would happen? The market will go up. If the quote is strong, the market will go down. So for example, if you say JBP versus USD, we're basically saying that JBP will do what? Go up because it is the base. And then, which is the base. And then if you say USD is stronger, what will happen?
To go
down. Why? Because it is the quote. Okay, now that you basically understand what Forex trading is and you understand the base and the quote, I'm going to be showing you the tools needed for you to basically start trading. Now, you basically need a phone. And for whoever's watching this, they probably have a phone, or have a laptop, or have internet connection, of which they don't have a problem. So now, once you have all these things, the next 3 things I'm about to mention are the apps that every beginner or every single trader need. The first one is called MetaTrader 5. This is where we place our trades. So if you, for example, if you want to press buy, right, if you think the dollar is going to be stronger, right, let's say JBP USD, if you think JBP is going to be stronger, you open your MetaTrader 5 and you just press buy, and within an instant you will be locked into the trade, right? The second app is going to be the broker. Now a broker is basically a platform whereby we deposit our money and withdraw our money. So it's basically like the supermarket. If you want to buy something, you don't go directly to the factory to get the sugar. No, you basically go, the sugar will make the sugar for you and then distribute it to different types of retail sales stores, and then you as the consumer will go basically to those supermarkets to basically buy from there. That's basically the same thing with the broker. They're making things easier for us as beginner traders or as retail traders to basically be able to trade the forex market because our money is too small. So brokers are important. If you guys want the broker I'm using, link in bio, and I also have a video explaining MetaTrader 5, Forex, and TradingView. So if you're a beginner, go and watch those videos. I'll link them down in the below or click on any of these videos. So without further ado, let me mention the last app, of which is TradingView. TradingView is basically the charting app. So let's say for example you want to go to a certain place. What would you use to go to the certain place? And this is your first time, right, on a road trip. You will basically use Google Maps, right? So Google Maps will help you basically direct the exact place you want to go to, giving you directions to where the place is. That's the same thing with TradingView. It will help you know where the market could potentially go and be able to get those sniper entry trades. Now there's a lot of apps, but these are the 3 main apps that you need, and you can get all of them linked in the bio. So without further ado, let's move over to the chart.
If you're looking to take your trading journey seriously, then you can click the first link in below. There is a 30-day bootcamp course whereby I teach absolute beginners, intermediate traders, people who are finding it difficult to make money, actually find profitability. So if you're interested, click the first link in the bio, and it's only going for $34.
Okay, now he basically understands what forex trading is, the fluctuations that they are, but now I want to teach him how to do technical analysis as a beginner trader, right? So technical analysis favor is basically looking at previous price action to predict what will happen in the future. So I want to basically look at the seasons, right? So like we have summer, autumn, winter, and spring, right? So within these 4 seasons, you obviously know that after summer we have autumn, after autumn we have winter, and after winter we have spring, right? So how do you know that we are approaching summer? How do you know that this is spring? You probably see by the pink trees and all that, right? How do you know we're approaching with summer? Probably see by the way the pink trees fading away in spring, right? There's a lot of things that you can know that, okay, now we are about to enter autumn. Like for example, if it's autumn, you will see that the trees are kind of like turning orange. Have you seen, right? They're kind of like drying off. That's basically the types of season we have in like general, right? Okay, so now I'm gonna be switching over to my screen. So right now you might be seeing these boxes and everything, right? So now you might be confused. You don't know where to start, right, Favor? You don't know, like you might be like, okay, should I start over here, right? Should I look here, right? Or should I look in the middle, right? Or should I look down? Like you're just basically confused, because that's basically how difficult trading is, especially to a new beginner, right? But I want to tell you that you shouldn't be afraid, and I'll give you a reason why you actually shouldn't be afraid. The reason why I said you shouldn't be afraid and you shouldn't be stressed is because basically the only place you have to look at is where the market is. So now if you swipe all the way, you'll see where the market is, this current point here. This is where we should be looking at if we want to enter the trade, where the market is currently. Now, based on you basically looking at this, does it look like it's up or it's down relative to everything you're seeing here?
Looks like it's up.
It looks like it's up, right?
Yes.
So yes, now this is up, and these things you're seeing here are what we call candlesticks, right? So now candlesticks are basically the main thing that we'll be using for this technical analysis, because candlesticks show us where the market could potentially go just by showing us certain sizes and certain reactions, right? So through these reactions we can guess where the market could potentially go. Okay, so we have 2 things. We have this candlestick and then we have the line chart. Okay, so this line chart is basically a simpler form of what is actually happening, right? So I don't know, if you look very closely you'll see things that look like steps, right, or elbows. Let me just call them elbows, right? You see this is a place where the market rejected and went another direction. This place over here, right, there's many different types of places, right? This place, there's so many, I can count as many as possible, right? So these areas are very important, right? So if I switch over to my candlestick chart, these are areas where price rejected, right? So if you look closely here, there was red candles, right? There was momentum, and then what happened? It shifted. Here as well, it was going up, then it shifted. Same thing with here, right? So all these corners, they give us certain information, right?
Yeah.
So basically, this line chart is basically like a bicycle. You know, when you're riding a bicycle, there's two things, right? Those helping wheels that help you not to fall. This is what the graph chart basically does. It helps you, like, as a beginner, to see what the market is showing, right? To see the up. Maybe like now you can clearly see that this is going up because this is a line chart. But once you understand everything, this is where you come back to the candlestick chart. This is very important, okay?
Yeah.
So now I'm going to be explaining to you how the market actually moves with candlesticks or with line charts, right? So the market moves in two ways, right? There's two ways that you must focus in. The first one is called an uptrend. So I'll just type. The first one is called the what? Uptrend. The second one is called a
Downtrend.
downtrend. Correct. Downtrend. Now, the word uptrend and downtrend basically are self-explanatory. So they basically tell you what they are doing. Up basically means going up. The market is going up. So when the market is going up, that means that you must buy, right? So that means the base, which is like here JVP cat, that means JVP is what? Is stronger. So you must be looking for buys. That is an uptrend. In uptrends, you look for buys. Keep that in mind. And then in downtrends, we look for sells. Okay? So now, basically, this is what I want you basically to understand. I want you to understand that in these uptrends and downtrends, you must basically, there are certain levels where you'll buy, right? Let's say, for example, you want to buy a pair of, you want to buy yourself the latest iPhone, right? And it's going for $2,000, right? iPhone 17 Pro Max. You want to buy it and it's going for $2,000, right? And Black Friday is it's next week, right? And during Black Friday, that same $2,000 phone will be $1,000 on Black Friday. Would you rather buy the phone right now for $2,000 or wait for it to be cheaper and buy it at $1,000? Which one would you choose?
I'm gonna wait for Black Friday and buy it for $1,000.
Thank you. So that's basically the same thing with the Forex market, right? So in an uptrend, the market rises high and comes back low for a cheaper price, and then people buy it, and then it rises at the same price, right? So now, let's say, for example, this is the price of the iPhone in demand, right? And it is going for $2,000. So instead of buying it at $2,000, you basically wait for the price to come back down, and then you buy the phone, right? And let's say now you buy the phone, another new model comes in, and instead of buying it all the way, instead of buying it at the top, the next iPhone 18, for instance, you just basically wait for it to come back down in price, and then you buy again, right? That's basically the same thing with trading. You buy at cheaper price points, right? So basically, there are certain ways to catch these price points, right? And I'll explain everything you need to know about this uptrend after I explain the downtrend. Now, the same thing applies with the downtrend. Let's say you buy a pair of shoes, right? You buy them for $100, right? But because you bought them for $100, right, you want to sell them for a more expensive price than they actually are. So your friend decides to buy them from, let's say this point right here is $100. Your friend decides to buy them at how much? $150 from you. So the price rises up, right, at $150, and then you sell it for him, and then you make profit, right? So that's the same thing, right? The shoe is $200. You sell it for him at $250, and then that's basically how it is, right? So this is called an uptrend, this is called a downtrend, right? So if you look closely, there are certain things that you must look at. There's these different types of elbows. I like to call these things elbows, I like to call them corners, I like to call them swings. You can basically, but the main definition is swings, but for beginners I can call them elbows, right? So these are called swings, right? These are what we call swings. So a swing is basically where the market rejects and goes the opposite direction, right? So let me give you guys a quick example. I'll delete all this. So if you look very well, from this point right here, this is the highest point the market has went. So what do I call it? I will call this the higher high. So HH stands for higher high because it's the highest point the market has went, right? And then I'll just clone. And then this will become the higher low. Why is this the higher low? This is the higher low because this is a low. As you can see, there's different types of lows. This was a low, right? But which one is higher between this low and this low?
This one.
This one is higher, right? So it's called a higher low because it is bigger than this one. Now a higher low is very important because it basically where we buy in an uptrend, right? This is the cheapest point the market could be. So we basically buy at higher lows and then we take profit here, right? So now let's move over to the downtrends. With the downtrends, you see this similar place, right? So looking at this chart, where is the lowest point the market has reached? Wait, is it this point? Wait, I'll just a lower low, right? And then we have lower high. Lower high, right? So this point over here is a lower high, this point over here is a lower low, right? So we sell at lower highs because this is where, and then we take profits at lower lows, and I'll still explain that as the video goes on, right? So lower low, right? Lowest point the market has ever reached. Lower high is basically the point whereby the market is right now, right? Okay, so now basically once you understand the lower low, how to identify lower lows and lower highs here, I basically want to show you guys how you actually identify them on the main Forex chart, right? And yeah, if you understand this, you'll basically start making money, like if you progress, right? So I'm not saying it's a get rich quick scheme. I'm just saying basically if you master it and if you can be able to see this type of patterns happen over and over again, you will be good, right? So here I'll be showing you guys how to identify them, what to do when you identify them, and how to actually make profit once they are identified. Okay, so now let's look at the Forex charts, right? If you just look clearly, I'll delete every single thing here, right? So mainly I look at the line chart, right? So if you look at the line charts, basically look, I want you to look for an area where you see multiple rejections, right? So if you look here, this place over here has 1, it has 2, and it also has 3, right? And this is also on the daily time frame. Okay, so we're basically going on the higher time frames first and then scaling down on the lower time frames. Okay, so this is on the daily time frame. So as you can see, we have multiple rejections just in this area. What does that mean? That means that okay, there's a potential that the market could reject now that we are above it, right? So just like a floor ceiling, if the market would have to come here, there's a good opportunity that the market could reject off this level. Okay, does make sense, right?
Yeah,
just like on the ceiling, whenever it bounces above, right now it is breaking above the ceiling. Now it could bounce, like you could use it as support or the floor. I don't know if that makes sense.
Yeah, it does.
It does. So what are we going to be doing? We're going to be waiting for the market to come back to this level, and then we can buy. Can you guess why we're buying? Because we're creating higher highs and higher lows, right? So if you look closely here, this is a higher high, this is a higher high right now, HH, and then this is a higher low. HL. Okay, so within these two places we should be looking for buys. Maybe the market could come here and then we buy or anything like that. So I'm going to play it for you guys. Right, you can come to the daily time. You can switch over to the channel, right? So as you can see, the market has finally came back to this zone that has multiple touches. So what should we do, favor? Should we buy or sell? Which one are we going for?
We're going to definitely buy.
Why? Because we've created the higher high and then higher low. So now what are we creating potentially? A potential higher low.
Higher low.
We are creating, this is a potential higher low to create a potential
higher high.
Correct, right? So now how do you identify that okay, this is a good time for you to buy? This is where you go over to the 1 hour time frame. Now on the daily time frame to know the overall trend. It's like going on a map, right? And then you want to go to Barcelona to watch the match, right? What you do is basically look at the overall Spain, and then from there you zoom in to basically locate the main stadium. So that's basically what we're gonna zoom into the 1 hour time frame to look at the candlesticks. As you can see on the 1 hour time frame, there is every single candlestick on the 1 hour time frame is what? 1 hour. So it took 1 hour for this one to open and close, and then on the daily time frame it took a day. Okay, so now what I'm going to be waiting for is called an engulfing candlestick or a shift of structure. So, right? Okay, so just patience. Okay. So now in this 1 hour time frame, do you think we're bullish or bearish? 1 hour time frame.
Seems like we are bearish.
Okay, actually we are bearish. As you can see, we're creating lower lows and lower lows. This is a lower low, so we are bearish. So how should we create a higher? Since we're creating lower lows, we have to first create a higher high and then a potential higher low for us to buy, right? So for now, because the daily is bullish, that is the overall trend. So you have to be patient. Okay. Now we have created a what?
Higher high.
Higher high. So we're waiting for a what?
A higher low.
A higher low in this area, right? Because this, just like on the daily time frame, this has multiple touches. If you look clearly, it has multiple. So we'll be waiting for a buy anyway in this zone. So the market has come to this area. So now what do? We look for buys, okay? We look for what?
Buys.
Now there's two main reasons why you should be looking for buys. It has finally came to this box on the 1 hour time frame, just like we did on the daily time frame. As you can see, we created a higher high, creating a potential higher low, and then we created an engulfing candlestick. Now, an engulfing candlestick is when one candlestick is bigger than the previous two candlesticks. This green candlestick basically is showing us what? That buyers have entered. So where would you enter here? You'd enter here.
Yeah.
So now to know that you've entered, you have to look a long position tool. So this basically is this place, like wherever you place. So if you place it here, so if you're placing it here, this is basically where you're entering. So you place it where you're entering, and then you put your stop loss. A stop loss is basically the way you want to, where you think the market should stop you out, right? What is a stop loss?
Where you think the market will stop you out.
Right? So if you think, like for example, we're entering for buys, if you think that if the market comes to this level here, you were wrong and you want to exit, that's basically it. So you keep the stop loss here at the lower low, right? Because if it breaks here again, we're now in a downtrend again. So we're going to be looking for what? Buys. Right? So this red thing is called a stop loss. This is where we protect our money. And then a take profit, we're going to put our take profit all the way to the next high. Right? So you basically look left. This was the last place the market stopped at. Right? So you're going to take your take profit all the way to that level. Okay? And then we are going to basically watch the market do its thing. Right? So now I went back to the 4 hour time frame just to speed up the process. Let me go over to the daily time frame. Okay. Okay, now we're going to basically continue. I switched back to the daily time frame, right? So now as you can see, higher high, right? Higher low, right? You can even see it here. Higher high, higher low. We shifted structure on the daily time frame here small, and we mainly can you explain to them why I'm entering for the trade?
Because
the daily, first of all, let's start with the daily time frame. This was the higher low.
This was the higher low
rate, and then
so we now find our higher high
rate,
and then we now
waited
for it to go to our next
potential
higher low
to then create what?
A new higher high.
Thank you. So now, why did we choose this place as the place of us to enter? Why did we choose this place? Because if you look left,
it has more than three touches.
So can you count them with me? One, two, three, four. Right?
And the market
it came back.
It broke. After it retraced, came back and.
Okay, then when it came back, what did we do? We went over to which time frame?
To 1 hour.
To the time frame. You see it. I hope you guys are also learning. So we went over to the 1 hour time frame. So now let's replay back this thing and see what actually happened. Do you see? Can't you see? Can't you see? Can't you see? TP smashed. As easy as that. Now you understand the strategy we're using.
Yeah.
I'm really happy, guys, for my brother. He's really learning. I'm proud of you, man. Okay. So now that we have created a higher high, where would you want to buy now? Now we've created a new higher high. Where is your potential place of buying and why? Just by look, you always look to the left.
My next
Is it-
potential
is-
place of buying.
Is it this place here? This place here? Where?
I'll choose here.
Oh, we've created a higher high. Now I want to create a higher
High,
low.
low, or here.
Okay, this place because
yes,
we've rejected
because
before.
we've rejected.
Perfect. So what do? You take your rectangular tool and then you swing it all the way to the left hand side, and then this is what you have. Okay. So now what do? You're waiting for it to come where?
Here.
To here. So once it comes here, where would you go to now?
We will now go to 1 hour.
Yes, confirm. So now, guys, let's wait for the market to come back to this level. That's if it comes. So we're still creating the higher high. So we're going to be patiently wait for the market to come. Right? So just like I explained earlier, and remember what I said, let's say the iPhone is $2,000. You just basically wait for it to basically come back to a cheaper price, right?
Yeah.
So we have to wait patiently. You don't have to rush. Even though it will take time, you have to be patient. Okay. Right. So it came here close to where you said, but this is when we go over to the 1 hour time frame. Okay. So we go over to the 1 hour time frame, right? Let's just drag this a bit. So the 1 hour time frame, what are we waiting for? Waiting for the market to shift structure and create a higher high, then higher low. Okay. Before we enter. So now if you see clearly, we have breaking structure. We are creating, this was a lower low, this was a lower high, lower low, lower high, lower low, lower high, lower low, and then now we finally broke structure, right? So I'm just going to wait for a retest and then enter. Okay, that's if we see the retest or an engulfing candlestick. Okay, this is a perfect time to enter. Can you guess why?
Why?
This we saw engulf. So I told you we're waiting for a retest, right? So but if you take your rectangular tool and drag it all the way to the left hand side, even on the 1 hour time frame, see that we have the first rejection, second rejection, and then on the third rejection, what did we see? We saw a engulfing candlestick, this one here. So there's this black, it's 1, 2, let me just show you. It is 1, 2, 3, 4, 5, right, candlesticks, and then this huge green candlestick, right? So if you look closely, if you zoom in, you'll see that this is like a cross-shaped candlestick. Now this shows that there is indecision, meaning that neither buyers or sellers are in control. So after seeing this, if you see a huge red candlestick, black candlestick, that the market is going to continue selling, right? But now we saw a huge green candlestick, meaning that buyers have entered. So where would you enter? Immediately after the candlestick on the 1 hour time frame. So you take this too long. Please, if you don't understand, tell me. Right? Do you understand?
Yes.
Where will you put your stop loss? Below here, right? Below this area. Okay. And then where will you put your take profit? You go back to the daily time frame, right? Or any time frame. You look all the way to the highest point. So this was the highest point the market has reached. So this is where your take profit is going to be. Is that understandable? Stop loss, let's just put it below this level. Take profit all the way to the upside. That makes sense, right?
Yeah.
You understand the logic behind it. Okay, so let's just replay. So now let's basically go back to the 4 hour time frame or daily time frame and look at everything, right? Right, so we're going to be looking at everything. Right, so now we are seeing the market higher low, came for a cheap price. Now we are now buying. Right, TP smashed. Are you understanding it?
Yeah.
Yes, you guys are seeing it. You don't need to complicate trading. Trading is very simple, but a lot of people complicate it. Okay, a lot of people complicate it, right? So this is basically the example. You scroll on the daily time frame, you look for higher highs and higher lows, look for potential higher lows, then you go over to the 1 hour time frame, look for shift of structures, and then you enter. Then you do what? Enter. So now that I've given you guys uptrend examples, I'm going to show you guys downtrend examples. Okay, now it's time for me to show you the update downtrend, right? So in downtrends, we try and sell at lower potential lower highs, right, and take profit at previous lower lows. Okay, so let me give you an example, right? Okay, so based looking at this market, you can see that this was a corner, this was an elbow, whatever, consolidation, elbow, right? So now this was what we call it was creating an uptrend, right? As you can see, this was a higher high. If you look closely, what was this?
Higher
High, right? That's very simple. Higher high. So I'll just type HH, right? And then here we had a higher low, right? So I'll just type H. Then so here what happened? Can you guess?
Don't allow me.
Yeah. Right. So here, what do you think happened here?
Higher low.
Higher low. This was the previous higher low.
Oh.
So what do you think happened? Low. So we broke structure. So are we still bullish? Are we still going in an uptrend?
No.
We are now in a downtrend.
Yes,
so this is now a lower low. Okay, this is now a lower low. Okay, so now what are we looking for? Sells. Okay, so now I'll basically take this lower low and put it here, right? And then this is now our lower high, right? It changes to lower high once we break structure. So right now, where do you think you would enter for a trade, right? We're looking for a potential lower high before selling, right? So where do you think you'll enter the trade now on the daily time frame? Always look from this point, from any place from here to here, and then look for a place with multiple touches. From here. Yes. Wonderful, right? So we can say we are going to be looking for sales from this point here, because we have 1, 2, 3, 4, 5, right? And then this is also a place we can look for sales, and then this is also a place because we have multiple touches, right? But what would determine us entering for sales here is the 1 hour time frame. Yeah. When we enter for when we go over to the 1 hour time frame, look for a shift of structure, and if you don't see it, you remain patient. Okay, so now I'm gonna play it and wait for it to come either to this level or to this level before we look for the shift of, or in between. Okay, so let me play it. Okay, so this is the lower low. Okay. So I think I'll go over to the 1 hour time frame to basically look for a shift of structure before entering. Okay, so now as you can see, we're basically waiting for the lower low push, right? So now we're creating this is a lower high, right? A higher high, right? So we're still creating that higher high push. So we're waiting for a lower high push to then create the lower low on the
1 hour.
1 hour time frame. So let's carry on and see what the market will do. So it has come here. So this is a higher high, right?
Yeah.
So where is the higher low? This is the higher low. This is the higher low. So we're waiting for the market to basically break and then retest. So this will come a lower low, then we'll enter for the potential lower high, and then we'll sell, right, on the 1 hour time frame. Is that clear?
Yes, sir.
Is that clear?
Yes, sir.
Clock it. Okay, so now let's basically replay this thing and see what will happen. Okay, so I'm still going to be waiting for the push to confirm that we are now bearish. So I just draw it. So once we break, I know that we've broken. Right, so just remain patient and all that. Okay, now we have created a new higher high, right? As you can see, this point here is bigger than all. It has closed above all of them. So this is the higher high and this is the higher low right now. Right, so this is the new higher low and this is the new high. So I'm waiting for the market to basically break, right? To basically break and retest, right? When it's retesting these levels. You saw how many times it rejected. So that means there's a potential chance of it rejecting of it. So let's just patiently wait. Now we're waiting for the retest. Now we've gotten the break, right? So now waiting for the retest. Okay, waiting for the retest and then we sell. So let's wait for it. Okay, we've gotten the retest. Okay, then we got our engulfing, right? So we got our retest, we got our engulfing. Then this is where we'll enter. Bam. Sorry, we're going to use the short position. We're going to use the short position. Enter here. Stop. Where's going to be our stop loss? Because our stop loss is going to be above
The highest.
the highest point, and then our take profit, this point, the lowest point here. Is that clear?
Yes.
Is that clear?
Yep.
Okay, so now let's basically enter for the trade and see what will happen. Okay, and tighten your stop loss. Okay, so yeah, you can go over to the forward time frame. Right,
Boom.
TP smashed
Again.
TP smashed, right? So now this is basically the simple explanation of how this trading strategy is and everything.